Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, February 4th. Trump delays tariffs on Canada and Mexico by a month and is set to talk with Xi Jinping this week, but the world is angry against Donald Trump, angry against Elon Musk, and Tesla's results say a lot about that anger. Broadly, US equities recovered yesterday, a part of early losses after the news of a delay in Mexican and Canadian tariffs, but futures are again in the red this morning. Oh my God. Headline hunting about the latest on Trump and his tariff threats is what traders are up to. Since Monday, the news of a month of delay for the tariffs targeting Mexico, well, they landed soon after the US opening bell yesterday, and similar news about Canada came a little bit later during the session. As such, by the end of Monday's trading session, both Mexico and Canada, they managed to talk and agree with Donald Trump to delay the start date for 25% tariffs by a month by sending 10,000 troops to their respective US borders. The saga will continue in a month and even before that because the anger is growing. On the European front, nothing more than increased tariff threats and mounting tensions with the European politicians, obviously. Now, Polish PM Donald Tusk, which was also a very known figure in the EU politics, called the prospects of a trade war unnecessary and stupid. Now, the STOXX 600 index recovered most of losses yesterday, but obviously appetite remains limited. There is one bright spot inside Europe, however, and it's the Brexited Britain that could finally maybe benefit from the costly Brexit decision of theirs by simply avoiding a trade war between the European Union and the US. Look at sterling shining like a new penny against the euro these days. But again, here as well, nothing is certain with Donald Trump. On the Chinese front, while Xi Jinping and Donald Trump are set to discuss about these 10% tariffs this week, but China isn't waiting to strike back because Beijing has already announced retaliatory measures, including an antitrust probe into Google and also a 15% tariff on US coal and LNG imports. Now, overall, we must admit that Trump's heavy and aggressive threats have been utterly efficient for getting what he wants done. The markets actually recovered from the early session losses. The S&P 500 and Nasdaq 100 indices, for example, that gap opened the week below their 50-day moving averages respectively, recovered a good part of these early losses and ended the trading session at around their 50-day moving average, having even made a small attempt above these levels. Small and mid caps in the US behaved similarly, though they printed bigger daily losses than their bigger cap peers in the US. Now, the US yields were kind of stable yesterday. The US 10-year yield actually fell, but then rapidly recovered as the US Treasury pulled its estimate for the current quarter borrowing lower, while the US dollar gave back most of the early session gains on Trump tariff threats and closed Monday's trading session lower than where it started. Voila. The peso, the Canadian dollar, and the euro jumped. They recovered their early losses, and gains in the euro dollar were also backed by a stronger than expected CPI reading printed in the eurozone yesterday that actually showed that the core inflation in the eurozone on an annual basis didn't ease in January. It was just around 2.7%. But both core and headline figures printed negative numbers on a monthly basis. So the euro is under a decent selling pressure again this morning against the US dollar. Now, Donald Trump risks obviously prevail, and they will continue to prevail, especially given that there hasn't been much new news on the wire, especially on the European front, mind you. But the way Donald Trump gets things done, gets what he wants from the other nations, and also the interference of Elon Musk in world's political affairs are not necessarily positive news for people and their company involved in these discussions. Because first, Canadians are so angry right now that some fans in Ottawa and Toronto loudly booed the American national anthem at NHL and NBA games. That doesn't sound good. Then, social media exploded with calls to boycott US products in Canada, and some Canadians are even looking to sell their winter homes in Florida, according to Bloomberg. And more importantly, Canada actually promised to hit back in ways that could cripple the US car industry, leading to major job losses in the US. And Ontario has also threatened to cancel its contract with Elon Musk's Starlink. It's just a lot of news in just one day. While inside the US, Tesla sales plunged by more than 12% in California last year, and annual registration for Model 3 sedan dropped by a third. Same in France, Tesla actually sold just a little more than 1,100 Teslas in France in January. So France is Tesla's second biggest EV market in Europe. And while these prospects or the things could, expected to be worse if Elon Musk continues to support the far-right candidates in Europe and help them win critical elections. You see, the problem is that a typical Tesla buyer is not necessarily a far-right voter. Anyway, Tesla was down 5% at yesterday's trading session. Beyond Elon Musk and his political ambitions, Tesla relies on Canadian suppliers for key auto components, including aluminum, steel, and batteries. And its new gigafactory in Nuevo León in Mexico is expected to produce its next generation electric vehicles. And while Trump's trade policies are obviously a mathematical disaster for a company like Tesla, no matter the Techno King's good relations with the White House. And his relationship with Donald Trump is not necessarily on a solid ground, mind you, because Donald Trump said yesterday that he will be granted power where he can be granted power and not necessarily everywhere. And Trump is also making friends with his nemesis, some Altman for AI, for example, and all the things look quite shaky to me. So buying Tesla for Elon Musk will certainly prove to be an unprofitable trade. There is a high potential for giving back the Trump-led gains actually in the medium run. The key support here in Tesla shares to last year's rally, supported by robo-taxi dream and Elon Musk's political ambitions, and not necessarily by the company's actual results, stands near $352 a share, which is the 38.2% Fibonacci retracement on April to December rally. Now let's talk about something else, please. Alphabet is due to announce its earnings after the bell today, and expectations are strong with a 12% revenue increase expected last quarter and a jump in earnings per share from $164 to $212 a share. Google Cloud, on the other hand, is projected to have grown around 32%. Now these numbers are looking good. But investors are skeptical about any slowdown that we might see in growth as they are facing massive AI investments from the big tech companies. A company like Google is obviously in the perfect spot to benefit from AI investments, given that they have a huge amount of user data in their hand and they can make something out of it. But investors want to see the AI investments bear fruit to digest a pledge for, more AI investment, especially after DeepSeek, the Chinese DeepSeek, awakened the idea of doing things for a cheaper price last week. So fingers are crossed for Google earnings. The earnings now need to be good to counter one, the AI worries, and two, the Trump worries. Good luck. Note that AMD is also due to report its own quarterly earnings today. Their cheaper chips could obviously be an alternative to NVIDIA's more expensive, extremely expensive actually, chips for many companies that are willing to buy performance chips for their AI projects at a lower price. So let's see if AMD results are in line with that narrative or not just yet. Now, so far, AMD has been quite unable to convince investors to come back to the stock despite more than 60% discount to the share price from last year's peak levels. Good earnings could eventually bring some investors on board. On the economic calendar front, the monthly avalanche of US jobs data begins today with US job openings data due later this afternoon. Any strength in US jobs data will further fuel the Federal Reserve hawks and will help push back the expectation of the next rate cut from the Fed further down the road. For now, the first rate cut or the next rate cut from the Fed is being priced in for June, the earliest. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments and please do not forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.